With the biggest demand slump in oil in 2 decades and the biggest ever weekly build in domestic US crude oil supplies, just how much of a difference was the OPEC Plus deal to slice 9.7 million barrels of oil a day off production? How much of that is going to make a difference? Sam Wahab is oil and gas analyst at SP Angel, and he joins us now. Sam, what are your thoughts on where we are with the price of oil in the context of what they seem to be pleased themselves with having hammered out this deal of production cuts?
Yes, it doesn't seem to have worked out that well. Looking at where the prices have gone since the end of those discussions, and it's not been a particularly good year to date for oil price bulls. The reason for that is that clearly it came too little, too late. At the beginning of when the coronavirus issues hit the oil market, and then the subsequent OPEC Plus meeting where Russia sort of walked away from the table. I think we'll look back at that in hindsight and say that was the wrong move. So 9.7 million barrels have been cut from OPEC Plus, obviously Russia and the de facto leader Saudi Arabia taking the brunt of that. Around 5 million barrels the market expects to come from those places outside of the OPEC Plus, like the US. And then also non-government mandated production cuts would probably come into play, and that's as a function of shut-in wells and uneconomic places that are producing at the moment. So we're looking at just shy of 20 million barrels cut from the market on an optimistic case. Now compare that to the IEA and their projections for April alone. We'll see a 29 million barrel a day cut, fall in demand, and then just short of that, a 26 million barrel short demand in May. So still a huge gap there of inventory build-up, which is clearly going to weigh heavily on the oil price going forward.
And of course, OPEC itself has a record of busting some of these production cuts that have been put in place in the past. So the market knows there's a lot of sort of skepticism about these numbers in any event. But what effect do you think the cuts that are being put on the table will have to those oil-producing nations? Because we know that Saudi Arabia, having already gone to the market with an IPO or partial IPO of Aramco, it wanted that money to bring onto its balance sheet for the country. And we know that Russia is finding the going tough at oil at these levels in any event. And with reduced income coming through from a smaller production level, that's going to hit these nations hard, isn't it?
It's going to massively hit them. I mean, if we go back to the last oil price war in 2014, the fall in the price of oil, which Saudi Arabia thought that they could weather, given that they can probably produce at the wellhead at single-digit break-even. But the other issue is that these states are hugely over-reliant on an under-diversified sort of country, and therefore they have to eat into their fiscal reserves. At the time in 2014, Saudi had 1.7 trillion in treasury reserves that they were happy to sort of burn through. We sit today, they've only got $500 billion, so much less. They have much less to play with, and they still have a huge reliance on the oil sector. On a fiscal break-even level, they need to produce, they need the oil price to be between $80 and $90 per barrel, just so that they can get fiscal stability. Similarly, in Russia, they need in excess of $50 a barrel. They're slightly more diversified. So it's going to have a huge impact on those two particular countries, and that's why it's in their interest for higher oil prices. But clearly, the flip side for that is that the shale producers in the US, which are the number one producers at the moment, they've got more efficient and they can produce at lower break-evens as we sit today.
The issue is there as well is the fact that Donald Trump initially came to power on the promise of more oil being pumped, and a lot of these smaller companies able to benefit from a Trump administration. So he's clearly got an audience he needs to play for. But if he's going to start to have to cut production, that's going to cause a political issue, isn't it, for him?
It is, but I think society sees that we live in unprecedented times. This is a global pandemic that no one's really budgeted in their own forecast. So there will be extenuating circumstances for that. But you're right that President Trump's under quite a lot of pressure, notwithstanding the oil industry within his country, but also the banking capital markets. All of these companies are very highly leveraged, and they will be missing their coupon payments and et cetera. They'll come under a lot of scrutiny. So he will also have to appease the banking industry, and there'll be less less able to lend to these sort of companies. And I think I've seen projections of around 70% of the oil producers in the US could face bankruptcy this year. Most of those will be stemming from those producers in the Permian Basin, understandably. So, yeah, there's a lot of political ramifications on this. There will be quite a lot of heat on Trump, but as I say, it'll be tempered somewhat by the unprecedented times we live in.
We hear a lot about the discussions between OPEC and non-OPEC nations these days, with this OPEC plus group that seems to have come out. And of course, when you look at the list of nations that are not part of the OPEC grouping, such as Russia, a massive oil producer, and of course the US as well. Going back to OPEC itself, is OPEC, do you think, now a spent force? Is it effectively dead?
I think that's a bit strong to say that it's dead. Clearly, they don't wield the same amount of power, and they're not the omnipotent force that they once were. And the function of that is clearly that the US have grown into the number one producer, and that's happened over the last sort of 6, 7, 8 years. What we have seen is they still have a very important role to play, and that's in bringing disparate nations to the table to make what are quite important strategic decisions very quickly. We've also seen quite well in recent times, anyway, that over-compliance with their oil cuts, and that means that they're actually cutting more than they stated that they would within the meetings, has also been adhered to. So they do have an important political role for that to ensure that takes place. In terms of going forwards, as I mentioned, the break-even levels will force a lot of bankruptcy in the US, so expect production to fall off there by quite a material amount. And on that basis, you could actually see the power of OPEC and Russia as well actually start to increase again. And as I mentioned, with the banking industry in America, will be more reluctant to lend to oil producers. So we might see less of a resurgence within the US market, and I would say OPEC might start to become that force again.
Just talking about this point you make about bankruptcies, how does what's happening in the oil sector at the moment make itself felt on some of the smaller cap companies? I know these are very much central interest to the retail investor, the retail trader, looking at the potential next 10 bagger, of course, coming out of some of these small companies. But in the current environment, one wonders just how difficult it is going to be for these small cap companies to make any progress at all. What is your view from SP Angel?
Well, small cap companies feed on capital availability. Clearly, we're in an environment where there's less, and that goes for any sector. In terms of how I see this playing out, oil will clearly bounce back because a lot of these fields will be shut in. A lot of projections from a number of surveys are that this will be a V-shaped turn into another bull market, and it's within those times that you do see those sort of 10 baggers that you spoke about, probably less and less likely than sort of 10 to 15 years ago, but it's still possible. In terms of SP Angel, we look after a number of small companies. I personally cover a lot of small companies that I see a lot of growth in, and that's because they're capitalized sufficiently to weather this, what we would see as a short-term shock. Even the IMF believe that we should see, in some countries, some double-digit growth into 2021 and 2022, and that's where we'll hopefully coincide with another oil market run. A
couple of small-cap stocks to watch?
Yeah, I've got a couple. I mean, Rockrose Energy, listed here in London, is one that I've been tipping for the last few weeks. I just think it's clearly undervalued. There was a sell-off in line with the oil price plunge, which I believe is completely overdone. They've managed to increase production by 117% last year. They executed a very good deal with Marathon to make them a material producer in the North Sea. And to give you an indication of how disconnected the capital markets are to actual fundamentals of a company, they're actually trading at 32% of their unrestricted cash position, which in any market is crazy. But this particular one, I suppose it's become the norm. Another company which we look after at SP Angel is a company called Union Jack Oil. The reason I promote this one is that they're fully funded after a fundraise last year, and they're operating on 3 quite large fields, one of which is the West Newton field onshore UK, 2 appraisal wells already drilled on that. And it could turn out to be one of the biggest UK onshore conventional discoveries ever made. So it's a very big prize for a fairly small company, and they'll look to also hit first production at their Wrestle field later on this year, and that has an economic break-even of sub $20 a barrel. So we could even make money in this crazy market that we find ourselves in.
So just to confirm, are these both clients of yours at SP Angel?
No. Rockrose Energy, we don't have a corporate relationship with them. It's just a company that I think is sufficiently undervalued in this market. But Union Jack, on the other hand, we do have a corporate relationship with.
Lovely. Okay, look, Sam, it's a pleasure to catch up with you. Thanks indeed for joining us. And also your thoughts on those two small cap stocks to watch in the sector. Stay safe. Sam Wahab, thanks indeed for joining us, oil and gas analyst at SP Angel.